Hello, everybody. Welcome to Weekly Market News. Today is Monday, 7th of June, and we are ready to begin a new week, which is holding some key events for a future of either monetary policy or a future performance of stock indices and stocks in general, and obviously some forex currency pairs. Let's look at the markets and know what was happening last week as we on Friday kind of broke the overall very lazy and uninteresting sentiment, which represents this sideways price action. You can see the Friday, this green candle representing Friday, that was able to close a little bit above the multi highs here. It wasn't able to broke the previous high from last week. It kind of closed very near to it, and we are beginning the new week with a slightly shorting and slightly selling price action. And then about the Friday, which was the most interesting day, like I said before in the previous video, Friday was the day when the job data from USA was released. Let's look at the numbers and how it looked for the investors and why it happened, what happened. And I'm going to explain to you later what this could mean for a monetary policy in the United States. Let's look at the numbers. NFPs rose by a little more than 500,000 K. It was more than expectation, obviously. It was more than last month. But the more important thing here is the unemployment rate, which dropped to 5.8%. So we are below 6%. That's very positive. But more or less, the other numbers, and especially this number, which wasn't that big that we might expect, and kind of the Thursday ADP report indicated that the number might be slightly higher than 500K. You can see a little less than 1 million jobs added. Obviously, the claims were looking good as well. So everything was looking kind of fine. But more or less, like I said before, the 500K number here, the NFPs, is kind of getting where we at. It's kind of how to say. It's more or less the mixture of the numbers here. We should not expect here any fast approach of FOMC to normalize the monetary policy. We will probably see more or less the same thing, the same rhetorical answers to the previous questions. The big question here is inflation, which is scheduled to be released on Thursday this week, and this will be one of the most interesting days and one of the key events for this month, as we expect the FOMC to hold its meeting and decide on the interest rates, which most probably will remain at the current levels. But there may be some speculation, and there might be some indication about the future of QE, quantitative easing, and the printing money, which probably will get reduced by the end of the year. But it's closely tied with the numbers of inflation, which will be released, like I said before, on Thursday. And based on those numbers, we probably will expect either faster approach to normalization or just holding the ground here, and probably will not signal anything just yet, and everything will be just in these. Everything will be in favor of some summer rally on stocks. So, like I said before, stocks kind of were trying to broke the sideways price action, more or less. Very boring, to be honest with you. Very boring few days, few weeks at the stock market, and especially the stock indices. As the most interesting price action can be seen on some mammoth stocks like GameStop, AMC, or BlackBerry, which ended a week in red numbers. Although we had some pretty decent and interesting price action over there. So if you really want some action, I suggest you to look at these meme stocks and probably don't look at these stock indices. You can see the price action here last week was horrible. The Thursday and Friday, obviously there was some big macroeconomic data. Monday is looking somewhat like a correction of those gains, Friday's gains. So we were not able to sequence another gaining session. So it will probably be a tough week for stocks in general. Again, I would not expect any huge gains here. Probably we will remain in the sideways price action, especially at least until Thursday when there will be inflation data released in the United States. But also on Wednesday, we will look at the macro calendar later. There are some key events like ECB meeting in June. Let's look at the Forex, which was more or less more or less the same in terms of how interesting the markets were last week. Was going sideways price action, Euro USD, GBP USD. You can see the sideways price action here. The US dollar was able to get some gains over there. Wasn't able to hold them though, and came back to test the low of this consolidation, and now is looking like very undecisive. Really don't know what to support the future price action here because the yields are somewhat low. Really tough. Good economic data from US, but nothing really significant for summer. So I would not expect any huge gains here as well. Same thing about GBP USD. Where GBP is also in the sideways price action in a trending channel and not really looking to break the channel anytime soon. Although this consolidation is kind of giving us a glimpse about what is going on the market. Some of the volume most probably get accumulated here, and we will sooner or later see some break above or below this trending channel. But as right now, we do not really see that any huge price action should be seen here in the coming days. But like I said before, we have some major macroeconomic events which can put the price action on a different level. We had an OPEC meeting last week where the OPEC producers and non-OPEC, OPEC plus, were kind of they agreed on the gradual production increase, which is more or less something that we expected. Not really a huge surprise for the market as well. You can see on the price action here, but obviously $70 a barrel for oil WTI is kind of a lot of money. It's a big price, a huge price. It's very high, and the correction here makes really sense. So I would expect the price maybe to go even lower, 66, 67, $67 a barrel, and probably remain around that price. It's a pretty decent price for all the producers. They all can make money here on $70 a barrel. So would not expect any huge drops and even huge gains. But in the other hand, obviously you have the Iranian production, which is probably going to get rid of the sanctions and probably going to ramp up the production very soon, which can put pressure on the market. But I think OPEC is kind of aware of the possible risk over there and can very well wait on the market here as well. If you look at the other commodities markets, gold was also a little bit interesting. You can see here the price action was going down below 1900, which was mainly due to the stronger US dollar, but more or less the price action should be sideways here on or a little bit continuation of the correction, but I would not expect here any huge gains. This is obviously the inflation numbers can talk into the performance here very well, but we will see how that will play out. But if the inflation is more or less somewhat with the expectation, I would not expect the gold to go any higher above $1,900 dollars. Like I said before, let's look at the macro calendar and what other key events are holding there this week. For us on Monday, there's nothing to be scheduled. On Tuesday, we have GDP data from Euro. Nothing interesting as well. On Wednesday, we have Bank of Canada interest rate decision. That might be interesting. Nothing else here. Stocks exchange of oil in US. Thursday will be the most interesting day, as we have the ECB meeting and CPI data from US, also claims with the press conference from ECB. And on Friday we have GDP data from UK. And some secondary data, very secondary data. So in terms of macroeconomic news, I would not expect anything crazy here. Thursday session will be the most volatile, the most volume will be traded. So better look out for that on the afternoon. Probably would not go into some short-term trade, and if probably you might want to capitalize on the movement, but you never know where the markets are gonna go. So yeah, ECB and inflation numbers. Most interesting day is the Thursday. We'll see how the markets will react, and we'll talk about that next week. So if you have any question, leave it down in the comment section below the video, and I will see you next week.